Hey, what is up guys? Luke here. Hope you guys are having a wonderful weekend. It's good to be back for a bit. I'm still busy. But I'm gonna go over yesterday's trades, how we could have benefited from both longs and maybe even shorts. Even though the bias is extremely bullish and it should be taken only by signals for until they stop working according to ICT. So try to avoid shorts, but still, they may work. The probability that they work will be much less. They will work, but probably get more stopped out often than if you took shorts, than if you took longs, right? So, with our strategy, we have a sweep, Josh, FVG. You can enter this FVG, right? Your stop loss would be somewhere around here. I expect this FVG to remain open. Price comes back, but you should allow your stop loss to be below this FVG, because you should allow the price to come back and touch this FVG or refill it, but it's already refilled. So we should allow the price to come back here into this FVG. It doesn't go to random place, it goes back to this FVG, and then also this is a balanced price range. I'll go over that in a second. You enter here, look at the bodies, look how algorithmic it is. Look at the bodies, and right, this holding this FVG. It can wick down, but it doesn't go random place, it goes back into this Fiji, and then we can continue target previous session high. Since the bias is on our side, we can hold until the previous session high. So let's say you entered anyway inside of here, put stop loss at here, and you can probably essentially target previous session high, right? And that would give you pretty much like I don't know, 500, 600 bucks, around 600 bucks. Easy, simple, very trade, almost 3 RR. Great trade. Now let's say you want to hold longer. What do? Well, always take it from, I'm going to show you 3 different things now, and I'm going to go over the silver bullet as well. So from this low, Josh, this is the first swing low of the Josh to the swing high of the Josh, and you should be taking a partial at 1 standard deviation, another partial at previous session high, which should be your maximum. But if you want to hold longer, you should come to 2 to 2.5, because this is where we'd probably reject. We came back to it, we didn't have immediate displacement, right? We didn't have immediate displacement. So what does that mean? We even forming bullish momentum, FEGs and PD arrays, and closing even above it. So that means we're most likely going to come back to 4. And we can see we came back straight to 4. I don't have my thingy, but you can see it's exactly to 4, and then we came back, dropped down, probably to the equilibrium of this range. Let's have a look. This is the equilibrium. Now at equilibrium, you can scalp this from here to here. You can scalp it on like a lower time frame, but you don't have to. You want to see what it does at the 50%. Does it hold? Yes, look at the bodies. Not a single body below it, only wicks. That means, and we have a strong displacement, that means we can continue going up, right? And we don't know how much it's going to go up, but most likely it's going to come back and take any high that we have. Let's see if we have any highs. If it loads, yep, we have this high, and we took this high right there. Okay, and then we start going down. So yeah, now let's say you missed out this setup. Not a single problem, right? Also notice what time the low of the day was made between 2 a.m. and 5 a.m. right? The low was made there most of the time. 70% of the time the low or high is made in London from 2 a.m. to 5 p.m. Okay, now how I want to explain the balanced price range. So people think balanced price range is big candle down, big candle up, this area between them where they intersect. So this here, from here, this area where there's both FEGs, that's balanced price range. That is not balanced price range. Okay, this is balanced price range. You have 2 FEGs. Price went down, offering only sell side, and it went up, offering only buy side. It's only offering sellers. Here it's only offering buyers. So it has to. Now it's balanced this area. Okay, once we come back and fill it and go up, this becomes balanced prices. Not right now. Once it comes back to it and then runs away from it, that's when it becomes balanced price range. So, and how do you draw it? Well, we have 2 FVGs, right? you have to look at, for bullish ones, you have to look at the high, which this is the FVG, this is the FVG. Which high wick from these FVGs is there? This one or this one? This one. So you'll anchor it from there. And which low is higher? Which FVG's wick is higher than the other? This one or this one? This is for this FVG, this is for this FVG. This one. So you'll anchor it like this. That is your balanced price range. Now, if we're bullish, if once we leave this price, once we leave it, come back to it, fill it, and then leave it, then this becomes a real balanced price range, and only then it is a BPR actually, balanced price range, and we expect that the price should not, this way you take notes, you should not close below the midpoint of it. Here is the midpoint of this FVG, of this BPR. Came back straight to it. I'm now just not doing it accurate, but you can see it, just a tick. Just respect the middle point, so you can have your stop loss anywhere here. You can move your stop loss anywhere around here, below it, or even just below the middle point, right? And have a safe stop loss. Came back to the midpoint and then continue going up, right? Now let's say you missed this trade, no problem. Well, there's always silver bullet. What's the silver bullet? Silver bullet here. This is 10 a.m. From here to here is your silver bullet entry time, not FVG. We're not waiting for FVG that you can enter inside, that is formed inside this time frame, this time period. We're looking for an entry during this time period, and your TP should give you 10 handles. Well, where can we go? Well, we have this swing high. Also, we have this swing high. Does it give 10 handles? I think it does. Let's have a look. Yeah, it gives about 15, maybe even more. I'm just give or take, okay? So, we're waiting for an FVG to enter on. Here we don't have any FVGs. Here we start to film FVGs. Nice. So you probably have your limit order here. Price never came back to it, and you pumped up, left you behind. Now we're gonna be really annoyed, and then gonna be like, oh, I'm gonna enter at this FVG. No problem. This is a nicer FVG to enter at for silver bullet entry, but this is also silver bullet entry. Price came back here. You have your stop limit inside this FVG, for example. Your stop limit, yeah, and the price never came back. It just keep continuing on without you. So here is where you decide if you want to leave the trade, like say I'm just missed that trade, nothing I can do about it, or you can start to go on the lower time frames and find yourself an entry on the 4 minutes. So you can go 4, 3, 2, 1 minute, 15 30 seconds, 15 seconds, 5 seconds, whatever you want to do. Here, same thing. We have FVG, but price is never coming back. You have used limit order here, it never came back. You have limit order here, never came back. Limit order here, never came back. Limit order here, never came back. So long it offers you 10 handles, that maximum TP is 10 handles, you can still find any late entries, no problem, but it didn't. So that's where you go back to the 3 minutes. Usually I just drop to the 1 minute. I don't go into 4, 3, 2, 1, but you can just drop to the 1 minute. But I'm just going to show you that it's fractal. Again, no FVG, multiple FVGs, and you keep trailing your limit order, and you're just not getting filled. Well, no problem. Then go to the 3 minute. Oh, oops, go to the 2 minute. Now on the 1 minute. Boom, 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 FVG. Boom, 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 FVG. Boom, boom, FVG. Huh. Well, what do you see? We have an FVG. And we finally got our entry. This is where you take your long. Just like that. Put stop loss anywhere, how much ever you can handle. I would say below the midpoint of this wick is a safe place to put it. So something like this. And your target should be 10 handles. Does our maximum TP offer 10 handles? Yeah, I showed you it was about 14 or 15 handles. So even if we had late entries, we can still take this trade, and boom, you hit your 10 handles and you're done. Now, let's say you don't like doing this, you can just drop from the 5 minute to the 1 minute and then do the same thing. Maybe you can even get a better entry, because now you're getting fed more data in a lower time, in a less time period. So let's have a look. Here's the silver bullet start time, and boom, we have an FVG here. You can enter at this FVG. We entered here on the 2 minute, but you could have had a better entry here. You didn't, you missed it, no problem. You wanted more structure, no problem. Price pumped up, from the chosh again. And this is the best time to actually take a trade, is after we see a chosh. So we have a sweep, chosh, and we enter at this FVG. on this candle here. You enter here, stop loss maybe a swing low, and then you can ride it, and now you have a even better entry and better even target. So now it became almost up to 15, right? Which is our maximum target was there. It's exactly 15 that we measured, and just like that. All right, now let's try it in the PM session. But before I go to the PM session, boom, 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 yeah. Let's go back to the 5 minute. In the PM session, let's say you missed out the silver bullet and missed out this trade, no problem. PM session, we saw previous session high, chosh, FEG, you entered the FEG, and you have to make sure that you know that you may get stopped out. Stop loss at the high, and you can target, you can aim for 2 RR. I usually ask for 2 RR or just 5 handles. This is 5 handles. Right? That's it. That's all you have to look. And you don't even have to put your stop loss all the way back here. You can lower it. You can put, this is rejection block, you can put it here or just above the midpoint of this wick. It's all up to what you do. Or you can hold to 2 RR. Or you can target these lows, right? Up to you. Anyway, whatever it does, it gives you a lot of money, almost. Okay. $1,000 now. Or what you can do is, chosh, this high formed before, this high formed after before the chosh, this low formed after the chosh, and find your standard deviations. You can take a partial here, which is around 7 ticks maybe, 7 points, which is about $400. Great. You can target to 2.5 to 2, right? You can hold not to these, but to 2.5, and look how price came back to 2.5. So what do you think happens when it comes back to 2.5? Will most likely come back to the equilibrium of the range. So you can find a scalp here, and I'm going to show you the most powerful entry you can ever get. This is our equilibrium, so we expect this would be our target, right? This here is our target if we want to scalp this here. So what did we do? We came back here to 2.5. We had immediate rejection up, which is great. We formed sweep, also internal sweep here, and New York AM low was swept. So we have our original entry, but you're waiting for a chosh, blah blah blah. You don't have to. Came back to here, price pumped up. Now what? Look at the time. 2 to 3 is our silver bullet time. We have a sweep, price goes up from this FEG during 2 to 2.5, you can 2 to 3 silver bullet, you can enter at this FEG. It's very small FEG, but don't look at how small it is, it doesn't matter. And you can have a 0 drawdown trade right here. And I did it live with one of my students, but you can enter right there and target 5 points or the equilibrium for a scalp, right? And boom, we hit it, 10 points. Now you are done with. Just simple as that, right? You don't have to look all the way up here because almost the time was going to be finished. We only have an hour to come back up here. It's unlikely, right? You have to stay in logic. So we hit our TP beautifully, and of course stop loss would be either the swing low, you can put it just below the FG. This is the order block, so you can put it below the midpoint of it or at the low of it, or a safe one would be just at the low of the body of the order block, and etc. So that was beautiful trade. So what did we do here? We took into account time. So forget the silver bullet, it's the time where the algo moves. This time we have an FEG, we entered it, we had our sweep, so we had our original entry, and we had this confluence that 2 to 2.5 would have. We expect the price to come back to equilibrium. Also, why is this strong? Because what did we do? We took the liquidity, we swept the liquidities, so the market does either run to liquidity or rebalance imbalances and rebalance to equilibrium. So if you took the liquidity, it can only do one thing. It now can run to fill inefficiencies or imbalances and equilibrium. So here our target was equilibrium, but here is also, this is also an FEG. So you can be targeting this one as well, or this one as well. Doesn't matter. You can. People use FEGs as entries, but you can use them as targets. That's what they're made for, targets, because the algorithm will run to rebalance imbalances. Run to, underline the word run to. So we are targeting, not really entering. but you can still use them as entries, and it's easier to use as entries. But you can take partial here at the equilibrium and maybe into consequent equation of this. This is all algorithmic. How tight it is to the tick. People like me to say to the tick. To the tick. It's never random, guys. Now, yeah, from here we want to see the price. Does it hold and continue up or reject? So here we had a reject. Price went up. We formed Chosh. Price went up, and then it's starting to go down. So probably I was expecting it to continue going down here. And you saw my last video, 3-minute video. I took a long. Why? Somewhere around here, because I'm expecting that bullish momentum to be disrespected. But this here is an order block, right? So I'm looking at the midpoint. Is the midpoint of the order block being respected? Yes, we respected, and I've had displacement up. So I took a long here. Also, if I drop onto the 1 minute, you will see that we have this is the same 5-minute order block mean threshold. We formed here an immediate rebalance. You see it? So we had a FEG, but it never got confirmed. It never became an FEG. We filled it with a wick and then closed right near the opening price. So I was comfortable taking an entry here. I was comfortable taking an entry somewhere here and putting my stop loss just below the midpoint of this thing. Very small. Something like this. Very tight, only 2 points. And then I would target again the equilibrium of this dealing range from here to here. So I targeted this. Look at the wicks. Look at the bodies. Came back here, I took my 5 points. Oh, that was also 5 points if I'm not wrong. 2.5 points, but I was in 2 contracts, so that would have made it 5 points. Just like the equivalent of 5 points. So yeah, you can do this. This happens every time. Let's have a look here. Let's have a look back on the morning long. Where is it? About order blocks. So what's the low? Look, pay attention here. What's the low of this wick candle? It's 49.0000, right? What's the opening price of this order block? Here. 49.0000, right? This is beautiful. It's never going back to a random place. You went through this FEG like, oh dude, no, this is reversing. No, it's going back to a reference point. It's never not random. Came back to here, touched it, accumulated more orders, and continued. Now, this here is a nope, it's not. Price went up. This became an order block, so we should expect bullish order flow. This is institutional bullish order flow. You don't have to look at DOM or anything, DOM or level 2. This is how you read institutional order flow. We have red candles. They should support the price if we are really bullish. You can see price came back down. It respected this order block, especially it didn't close below the midpoint of both of them. Even this one or this one, you can use them both because they're consecutive. It never closed below the midpoint of it, right? But what do you guys notice here as well? Price went up, went down. This candle low, which is 49.0250, and this opening 49.0250 right here. Done. Algorithmic, right? This candle itself is called a propeller order block. So this should propel the price very far. As the name implies, it should propel the price as fast as you can, just like immediate rebalance. And you can see we have this right there. So we should expect that the price should not close once this is confirmed. So once the price closes above it or just goes above it. So here, we just close above it. Of course, on the 5 minute, you can drop on the 1 minute and find the same thing, close there for earlier entry. This, we should not expect the price to close below the midpoint of it. I think I'll do it right. We should not find the price close below the midpoint of it. So your stop loss can be anywhere in here. Anywhere below this midpoint. Don't worry about these candles. Once the price closes above this or this propeller order block, this becomes a propeller order block, right? So right here, you can have your stop loss what, or let's say you entered at this FVG and continued, you can have your stop loss just like this. So where did we enter originally? Sweep, charge, FVG, in this, somewhere in this FVG. You can have your stop loss at break even essentially, or even in profit. You can have your stop loss just above here, the midpoint, and you will not get stopped out, right? Just like that, and then you can hold as much as you can, as much as you want, previous session high. This is how you can manage your position. So we start with a stop loss here. We move that after we got the charge, we expected this FVG to remain open, so you can have it below it once it forms the charge, and then propeller block, you can have it just below the midpoint of it, and it's smooth riding from here, just like that, guys. Hope you guys enjoyed, and I'll see you later on. Peace.